All right, everyone, good evening. Today is Thursday, September 24th, and we're going to talk about the market news of the day. All right, to kick things off, let's talk about the continued muted tone in markets. We saw the Nasdaq down as much as 3% at session lows. However, the S&P 500 and Dow finished just slightly up on the day. The S&P 500 closed near the threshold that many investors consider to be a market correction range, while the Nasdaq 100 did proceed to tumble. However, markets in Asia did end up down across the board, and the similar sentiment was shared in Europe. The 10-year is trading flat at 67 basis points, continuing the trend of trading sideways. For our first story on the day, let's talk about junk bonds. We see a 230 billion US dollar sales record amid this big global hunt for yields. And also, a lot of companies need cash. Obviously, they need their working capital to be up to par so that they have the funds to proceed with business operations. Coming through the time in March and April, a lot of companies were unsure of what things ahead would look like. So they wanted to have as much cash on hand to be able to handle the unforeseen. With this in mind, we see that junk rated issuers tilting away from securing lifelines like they did in March and April and moving towards using funds to refinance. All in yields for US junk bonds have dropped down to 5.81%, which mirrors pre pandemic levels. Companies like Ball Corp, however, have been setting records. In August, Ball Corp issued a bond for 2.875% yield, which is 2 7/8, which obviously is an incredibly low yield for something in the high yield space. Maybe it would be better just to refer to them as junk, given the incredibly low yield. That is the lowest coupon ever recorded for a junk bond. In addition, we see trends of call protection, which prevents companies from repaying early, being shortened in some deals, and covenant quality continuing to be an issuer-friendly environment. In addition, issuers have been pulling forward deals to get ahead of uncertainty that's going to come up in November with the American presidential election and a possible second wave of COVID-19. In addition, moving on to talking about the government, we see that talks on fiscal stimulus do continue. Democrats are now crafting a 2.4 trillion US dollar stimulus bill, which obviously is a lot smaller than the 3.4 trillion package that the House had passed in May. However, it is significantly larger than what Senate Republicans are willing to accept and what Trump has indicated that he's willing to sign off on. He said that his cap was 1.5 trillion US dollars. The proposed deal would help U.S. airlines avert massive job losses, which are supposed to kick in on October 1st. Also included is small business aid and a bailout for restaurants, areas hit particularly hard. With this in mind and the continued uncertainty, both Goldman Sachs and JP Morgan have cut their U.S. growth forecasts. The last thing you see in the list on the right is Amazon. Amazon told Echelon Fitness to stop selling its $500 Prime bike. Apparently, this was an entire large misunderstanding, as shares of Peloton fell as much as 7% early Tuesday on concern about new competition for Amazon because this company, Echelon, listed a product on Amazon that they dubbed to be a Prime bike and said it was done in collaboration with Amazon. However, Amazon quickly exuded the sentiment directly opposing that, saying that Echelon misrepresented the product and does not have any sort of formal partnership. Echelon already sells this bike for that same $499 price at Walmart and hasn't seemed to affect Peloton sales that much recently. All right, for our deep dive today, we're going to talk about global deal making, and there are 5 main stories I'd like to touch on. On the left, you'll see 2 IPOs, and then on the right, you see 3 private equity mega funds that are making big moves. Deliveroo is in talks for a British IPO after a delivery spike, obviously amid the circumstances of the pandemic. This Amazon-backed UK food delivery startup has a possible 2021 IPO. It was launched in 2013, and Uber Eats and Deliveroo are battling for so-called virtual restaurants, which are ghost kitchens where people will rent space and create a restaurant but not have any sort of dining area and exclusively sell their food through places like Uber Eats or Deliveroo. Newsflow Corp IPO'd for the biggest technology stock sale in the Toronto Stock Exchange history. It was in talks to sell his payments company to a competitor when the Canadian private equity firm Novacap Management stepped in to invest. This was about 2 years ago and allowed him to continue the movement into e-commerce, especially as it also brought a huge pension fund, the Quebec's pension fund, which on board for $248 billion. Newsflow raised $805 million in its IPO, which is $730 million for the company and $75 million US dollars for the Novacap private equity fund. They are going to continue to use this cash to continue this long history of acquisitions, expand its client base in Europe and North America, and take advantage of online markets that are getting legalized across the world, specifically in the sports betting and gambling arenas. The stock, which started trading last week, is up 47% since then, so it has been incredibly successful so far. In the deep blue in the middle of the screen, you'll see KKR. They're targeting Photowasho Renewable Ventures, an FRV photovoltaic plant in India. This InGrid, the India Grid Trust, is KKR's first infrastructure investment trust in VIT in the Indian power sector. And they're in talks to buy the asset in a deal worth INR 7.5 billion, which is the equivalent of a little bit more than 100 million US dollars. Potential investors also targeting this massive solar project include India's Hero Future Energies PVT Ltd, Eversource, and Idlewest, who are also big players in the Indian power space. Considering the right-hand side of the screen, we see two notes on Carlyle. Firstly, the TriNetX data acquisition. Carlyle obviously is this huge alternative asset manager with 221 billion US dollars in assets, is buying a majority stake in the clinical data company TriNetX. Equity capital from the investment came from Carlyle 7, which is an 18.5 billion US dollar fund. TriNetX has built a global network of research hospitals and academic institutions, working with biotechnology and drug companies to work with other contract research organizations and specialty data partners to come up with a more consolidated arena for healthcare data. Carlyle is a huge player in the healthcare space and technology space as well. Carlyle deals in healthcare. Recent ones include doing a $175 million funding round, 4 ground rounds, and backing One Life Healthcare Incorporated, the primary care clinic chain that went public in January. Also on the tax fair, we see them backing Zoom Info Technologies, which went public in June, notably under the ticker ZOOM, oftentimes confused with Zoom Video Technologies. However, it is different, but also a very successful IPO. Also in the tech space, you see that they just completed the sale of automation provider Eggplant Software to Keysight Technologies. This was also in June. So you see a lot of playing both in the healthcare and technology space. Carlyle Group has also been growing its presence in South Korea, which is not surprising because we see Koo-sung Lee being appointed as the sole CEO in July. He was previously the co-CEO and is now going to be the sole CEO. Lee seeks to manage insurers' capital, but put aside for more than 30 years to cover claims to generate a profit, which is much longer of a time frame than most private equity investors typically have, which is 5 to 7 years. So Carlyle has launched 2 credit funds with Shinhan Financial Group earlier this year. And in 2018, they divested their biggest investment in the Korean markets, the wholly owned ADT Korea, the country's #2 security services firm, for a profit of almost 1 billion US dollars. Carlyle has also recently raised over 1 billion US dollars from Korean insurers through these 2 credit vehicles mentioned in conjunction with Shinhan Financial Group. This, in conjunction with the foreign investment firms, also made for Korean investors. Considering their current movements in Korea, in June, Carlyle invested in KB Financial, tentatively agreeing to buy 200 million USD, which is about 240 million won, worth of bonds exchangeable into shares of KB Financial Group, which is the sixth biggest shareholder, so Carlyle then becomes the sixth largest shareholder in this Korean banking group, having a 1.2% stake, obviously very far from voting rights or majority. Finally, touching on Lee, we see that he is now going to be the sole CEO. So with that in mind, it's likely that they're going to continue their presence in South Korea. So that's one to watch. That sums it up. Looking forward to seeing you on Sunday. We're going to go through more detail on mortgage-backed securities, talk about mortgage derivatives, CMOs, IOs, POs, different ways to strip them, and very exciting stuff there. So thank you again for your attention. Great to see all of you tonight, and look forward to speaking again soon.